Hey, everybody, it's Mark Thompson, and I'm so thrilled to have my good friend Michelle, who's inspired me as an executive in general in all the different areas of the world that she's touched, particularly financial services, where she's really transformed and pioneered over decades a way of thinking and contributing to the livelihoods and retirements and the programmed investments of people all over the world. So thank you so much, Michelle, for being here today.
It's an absolute pleasure. Thanks for asking me.
I'm thinking about what you were able to create at Russell and the opportunity that you had to really think about creating that in a new way and also bringing yourself into the organization. If you were to look back now and think about a new executive's journey, what do you wish the earlier version of Michelle knew that she knows today about running such an incredibly complex and growing empire?
Yeah, it's interesting. I think the same advice I'd give to my younger self is the one that I keep giving to myself over and over again today. So self-awareness, as my father used to tell me, is a lifelong journey. And I think that's key to anyone in any situation trying to bring their best self to the table, is that you have to know yourself pretty well.
Mm,
And I would say if my younger self were to listen, because I was in a pretty big rush, I didn't prioritize over time, which I don't have many regrets, if any, because life turns out the way it's supposed to in my view. But I think that prioritizing me, my health, both physically and mentally, so I could show up to be my absolute best version of myself to the people
mm,
that meant the most to me,
mm.
or when I needed to turn it on in my organization, would have probably been time worth spending. It feels selfish when you're sitting in that C-suite role to say that you're going to take a call and walk while you do it, to say that you need lunch, to say that you actually need a break. And so I didn't for a very long time. And in retrospect, as good as I think I was along the way of prioritizing the right things at the right time, I always tended to come last in that equation. And you can only run on adrenaline for so long. And the positive energy that you need to exude to be your best self, I think, is a pretty important thing to be mindful of.
When you were taking this path, did you have other people to hold up a mirror, or did you find them along the way? Were there mentors or coaches that kind of helped you with that self-awareness or other aspects of the role that you were
Yeah.
fulfilling?
Yeah. Well, you don't get anywhere in life without the help of others. So whether you acknowledge it, recognize it, or seek it out, I definitely was in the seek out category. And that's been true from the beginning of my career in 1987. Some of my best friends were my colleagues, my best mentors, my colleagues, those that ended up reporting to me, and also those that were very senior to me in competing companies, who I respected and sought out their perspectives. You can't
Mm,
really execute somebody else's playbook. So I found my industry, and I think many others, to be very open to those that actually want to make the ecosystem better. So I've sought out advice along the way, being part of your great group with the life review plan. And who would have ever thought that I would actually get inspired and learn things from professional football and basketball players and scientists and everything else. So I think just being curious about other people, curious about yourself, and looking for people that genuinely want to give you feedback to make you better at what you do and how you can have a positive impact in your sphere of the world, I think, is incredibly important. So just being open to that feedback, never becoming too full of yourself or too insecure to
mm.
take constructive, candid feedback, I think has been a critical part of my journey.
Well, it's inspiring to see you being curious, even at this point in your career, and that's what inspires me most about people who've continued to grow and change and have impact, Michelle. And when I think about the unique role of the chief executive, you end up having this circle of stakeholders and who are really often in the role of being your boss. So you have the board of directors. So you go from that one boss that you might have had prior to chief executive to now
Yeah.
having to manage those that might have not equal impact on authority, but would have significant impact on your exit, if that were to be the case. Could you talk about how to manage or juggle or embrace the many different stakeholders, principally the board, because that's usually the big new step for a chief executive, whether she's newly in seat or aspiring to be there?
Yeah. Well, I've had experience from lots of different seats with governance, I'll call it broadly speaking, but sitting in the CEO seat and having that corporate board role as a dual hat is a different one, and one that you should embrace. And it doesn't come without its bumps in the road, because everyone there sitting at that table is very accomplished. It may be a specialist board, it may be a generalist board with business acumen. If you have the luxury of helping to choose your board, I would say that what you want to look for are thought partners, strategic thought partners with specialist expertise that can help your business get better. I believe that looking for people that are loyal to you, or that you believe there's a shared affinity in some way, is the last thing you should look for, because as long as you have the shared vision and alignment to make the company that you're a fiduciary for the best that it can be, and getting alignment on the time horizon is 9/10 of the battle. And then just making sure that you have low ego, purpose-driven individuals that care about your clients, that care about your shareholders, and they care about the long-term viability and strength of your company. The rest will all fall into place, because presumably you wouldn't be in your seat if you didn't have those same goals. So egos can get in the way, both a CEO ego as well as a board's. And I think as long as you're building a trust-based, data-driven, open dialogue amongst that shared governance structure, you've got great outcomes. Of course, as we see in the news every day, it doesn't always work that way.
Yeah, right.
But that drama that ensues, I do believe the causation of that is that there wasn't a trust-based, high-functioning team between the CEO, the executive management, and the board. And when that falls down, you can't manage through crisis effectively. So the job of the CEO is to ensure, and the chair is to ensure, that that data-driven, trust-based, high-functioning team is in place before a crisis occurs. And if you find that that isn't the case, no matter how hard you've tried, you're just in the wrong spot. And so so that's how I approach the boards that I entertain sitting on. And as I'm on corporate boards with the CEO, I have the utmost respect for the difficulty of that CEO role and the alignment and support you need to give them, while always making sure that you're doing what's right for the long-term stakeholders of the firm too. So it's an interesting triangulation, but it's one that unfortunately we're getting wrong more than right recently, and it's an increasing risk to the capital structure of business.
When you think about what kind of has gone off the rails that you might be able to share, perhaps saving people nameless from it, but talking about the nature of something that you've had to confront, I when you say 1987, I feel lots of empathy for being from that generation as well, because I remember 1987 being so proud at Schwab. We had just done the first SEC. We got a no action letter, allowed us to do a management-led buyback from Bank of America, which was at the time the biggest bank. We were hoping for synergies. They didn't happen. We had sold it for 50 million in stock, bought it back for 280 million, and then took it public right away on October 1st, 1987, for $16 a share. And 3 weeks later, it was $5, and it didn't get back to even the IPO price for about 5 years. So that was early in my career, and I felt like I had to build a lot more character than I ever wanted to do in coming through that transom and making decisions and so forth. Can you tell us about a time when you've kind of faced that where it came off the rails, and how did you decide to choose to be resilient about it?
Well, there are almost too many to choose from.
Okay.
So I would say one came to mind, which is a story, frankly, I've never told. In 2008, during the financial crisis, there are lots of stories to tell there, but the one that I'll tell that is more about the functioning of a corporate board,
Excellent.
as well as managing your own division,
Yes.
is one that there was no wrong person here, but you were solving for different things. So in 2008, I think I have the timelines right, but in 2008, when the crisis hit, we went from managing 52 billion to 26 in the course of a week.
Wow.
All because of the market reset. That was also true. I happened to be at William Blair at the time. That was also true of our banking business, our brokerage business, our wealth business. Everything was tied, as you well know, to percent of assets. And when the assets decline during a crisis like that, you have to adjust because your fees are priced daily, charged daily for the most part. And so your revenue immediately drops. So as one would expect, we had to figure out how to survive, how to make sure that we kept our clients' assets safe. But we were a multi-dimensional firm. We had lots of different lines of business that were very structurally different from each other. Our money management business and our reputation was built upon stability, right? It's a team effort. You create performance, you have client relationships, it's not transaction driven, it's recurring revenue driven, that's very highly dependent upon the stability of your team. So when we got into the room at the corporate board to talk about what do we do now, the facts were very clear that we had to do something. And the question that was posed is, how much are you going to cut out of each of your divisions? And some were more than others. Mine was very difficult to cut. And the pushback that I had appropriately from my chairman was, you have to have skin in the game. And I understood the concept and the bravado behind it. It's not as though I didn't have the fortitude or the backbone or willing to face the facts of what just occurred. I just knew that it was going to damage the business long term, and it would become a self-defeating prophecy that wouldn't be as strong coming out of that crisis as it was going in if I started to just cut things. So what I did instead, and the beauty of a private partnership is you can do these things. What I did instead is that I called all of my partners into a room and I gave them options. I didn't tell them necessarily which option that I felt was the best, but I had a clear leaning, and I'm sure they could pick up on that. But I gave them options about how we could manage through this. One was, and we had at that time, no non-competes, no non-solicits. Anybody could walk and take their entire business with them. It was a trust me. handshake partnership, which was frankly stronger than any contract you could ever put in front of anyone.
Sure.
And
Yeah.
everyone stayed because they wanted to. But one of the and this is I think this is the power of leadership by persuasion, but it's also the power of a team, right?
Mm.
And people identifying with something bigger than themselves. So I think purpose drives a lot of things, and transparency and peer respect drive a lot of things. And all of those were at the table that day. So when I presented, I gave options. The first was we could peanut butter cut across the board. That would mean that the most people to feel the most pain would be I would call entry and middle of the rungs, which was absolutely the worst thing you could have done. The next one would be to strategically cut major strategies, major distribution channels, major strategies. Be strategic about it, but shrink yourself in some way, either from distribution footprint or from manufacturing footprint. And the last one, which was my recommendation or my strong leaning, but the last one was that we all take a 90% pay cut. And that would be the partners around the table. And back in the day, I think we either made $50,000 or $100,000 in salary symbolically to always keep the fixed costs low. And I said, today's the day. Today's the day when that's what we need to really think about. But I need to know, because that's not an option for us as a firm or for our clients, if any of you are going to blink at any time over the next 2 years, because who knows how long this is going to be that we need to take this kind of draconian pay cut of the partners, not the rank and file, the partners. But we've benefited from the upside, and we need to be here to buttress the business in the downside. But if you're going to start to leave, I can't do that. And so, the troops rallied. The troops rallied, and I would have done, if they would have said they wouldn't stay, I would have had to make a different decision, but they all were in fact, they were all in favor. Some were actually even angry with me for putting the other options on the table.
Oh, interesting.
But I needed,
What character?
yeah. So anyway, those are the moments when you've got to trust your team. You've got to lay out the facts, but ultimately it wasn't. Command control would have been a bad decision there. And not knowing, and I had to trust that they were going to follow through on what they said they would do, and they all did. So it was phenomenal. That's
really inspiring. It's got to create greater bonding of the team and greater confidence from the public and the investors. Feels like a win-win by cutting in this regard, all the way around the table.
Yeah.
That's spectacular.
Well, we came back to record pay, record returns, record assets, and the rest was history. And it didn't last as long as we were fearful that it would. So it has a good ending, but it's, those moments galvanize you. And those are the moments where, in your own quiet solitude, you need to think through what's your best way, even if the board is telling you to cut. And in their minds, cutting meant cutting heads, cutting people, because that's a hard thing to do. You need to do hard things. An equally hard thing to do is to cut pay in a knowledge-driven business. But that wasn't an option for many of our other businesses. And so it was for ours, and it was the right choice.
It's very impressive. I remember at the time that we had gone through our crucible, I was actually kind of fearful about how nascent the business was. And so when Chuck Schwab said, everybody's taking a 50% pay cut, but it's going to be a forced savings plan, because he created a long-term incentive plan in ILTIP. And of course, the best thing that could have ever happened to a younger couple. So I'm inspired you did it at your level and from the top down. it makes a difference in building trust inside
Yes.
and outside of the organization. And I'd love to double click on this dimension of what would you then offer to a newer chief executive or one who's just aspiring to be on understanding the nuances of investor relations, because one of the distinctions we found at the time is we had to know better who it is, who are the owners, and what their various values were. I think as an operating executive, before taking the most senior role, I was always thinking about them in terms of whatever I saw at the analyst day or at the quarterly earnings call when I was just asked to do my swim lane report, and hadn't thought about how complex it was for the CFO and the CEO at that point, as she was looking at all the institutional investors and buy and sell side. What would be a short kind of lesson in investor relations in terms of how one of those leaders should think about working with the diversity of investors you have in at least a public company?
Yeah, well, first of all, I would say that investor relations sits at the CEO. And so don't think that your solution to that is to hire a great IR person. I'm not saying that there aren't great IR people, but where you see this intensity of activist investing
Yes.
and this intensity of volatility, you just can't afford not to understand your ownership of your owners. They are your owners. And so what I'd say a few different things. So number one, it's your responsibility. Number two, you have got to have your finance team locked down. It has to be an A team on the finance side and the legal side, so that you're not worried about the minutia and the import of being a public company. So that's number one. And then number two, I would have someone on your board that has an investor lens, and not just an investor in your industry and with the stage of growth that your company is in right now, meaning let's pretend you're in a healthcare company and you happen to be in a massive growth phase. So you hire someone who's a healthcare analyst who's invested in a lot of great growth-oriented companies. They could be wonderful, but I'm talking about someone who understands how the brain of an activist works. How do you maximize value for value investors? What about for hedge funds? What about for private equity? If indeed somebody's going to try to take you private or sees you as a potential to take private because you haven't managed the business as effectively as they think they could as a private company, and then launching it again with a bigger platform or M&A or whatever else. So I think just having that that lateral vision of how your company may be viewed by different kinds of investors, where it is you want to take the company, and be very clear about what that is. Investors in the public market can clearly buy and sell you every single day. So I think a lot of CEOs take the moral high ground and believe that they're in it for the long-term viability for the clients, for the company. And these are short-term investors, and that's a very bad way to look at it. Your job is to steward them because they are fiduciaries for other people's money. They have a job to do as well, and they need to assess the risk return with clear milestones along the way. So I would always view their short-term questions as their mandate to verify milestones along the way. Trust but verify. That may not always be the case, but it certainly helps you rationalize why they might be asking. But it is your job. You have to be the chief storyteller on why this is the appropriate risk return decision-making for the company and therefore the shareholders, and what milestones you will hit along the way to prove that you are executing on the story that you're telling. And if you approach it that way, you will be bulletproof from various kinds of investors at various points in time. And the ultimate failure, in my perspective, is that you get an activist or an investor that is part of the mix that has a loud voice, whether it's on your board or with significant ownership, and you're struggling to figure out how to deal with them. You know, you ought to go through that process with your board, with your management team. If I were to write an activist letter, what would I say? What would I say? And what would our response be? And you just, that's managing the risk of your business. But I think if you want to put a different lens on it, that's how I behave in my corporate board settings. And whenever I get called to come onto even very prestigious boards that are calling me because they have an activist and they want someone on the board, my answer is it's too late. I mean, maybe not, but it's going to be, it's no fun coming in to try to mediate at that point what should have been preempted previously. So I would just have a very preemptive, fluid, and well articulated vision for where it is you want to take the company and what milestones to keep your investors focused on.
That's a powerful response, Michelle, because I can't tell you the number of times I've had the privilege of interviewing great CEOs with great track records who've written great books, and they've been on this program and others who, with I think a little bit of revisionist history, do go back to the moral high ground, which is true about why they are in seat and why they care about the company and how they believe in the employees who serve the customers, and those customers and employees and the company. You know, Wall Street is rounding a quarterly drill. And so there's often a kind of looking in the rearview mirror at those experiences as one saying, well, I'm holier than thou. And so this is what I believe, and this is important. But the irony is that it's not showing empathy for the fiduciary responsibility of the people who own the company, which is what you've penetrated with this commentary around. They have KPIs. They're in custody of other people's money. Senior citizens, retirement funds, all the people who are relying on them to be able to have a relationship with the company and the CEO with a certain level of transparency and vision. It's another stakeholder group to care about.
Yeah, the only other thing I would add is it's also the CEO and the board's responsibility. I view it as a responsibility of the corporate board that I sit on to cultivate the right investor base. So I'm not trying to paint my entire industry with a halo on its head. But it's your job to cultivate investors that are business builders, that are good investors, that you've established relationships with. We can talk about index funds later, not now, but that too is part of your responsibility. So you want to bulletproof it against more short-term outcomes. And the way you bulletproof that is to be prepared for people to think through those, and especially your board. So they have the fortitude and the understanding of where the company is going and why. But picking, you don't completely pick your shareholder base, but you can court them. You can court them. And that's very important to do. Thinking very hard about who you want to be aligned with your company and owners of your company is very important.
When I hear you say that, that's reminiscent to me of when seeking out venture capital or those early stages where you do have to court and beg and pitch and build relationships and run up and down Sand Hill Road or its equivalent around the world, and understand whether I can get the smart money not just the money, whether I can get the committed uh, risk profile that they're willing to take the journey with us. And then as you get to be a
Mhm.
bigger public company, as you said, you can be traded in seconds. Um, I really appreciate that sense of empathy and planning. And I think that's very helpful as people start to socialize the concept that there are many different types of investors and how they can show up
Mhm.
with us. I
Yeah.
think about this amazing career that you've had in financial services. And then after building what is the most remarkable um, organizations around serving investors, you made the choice finally to retire and take the transition. And I've been excited and frankly thrilled to see how much enthusiasm you have for this second act and choosing to create MaidenVest and go a very entrepreneurial route. Could you talk about how you made that choice? Because I think everybody who's successful thinks about what's
Yeah.
next. And
Yeah.
it's not a trivial transition that you've made. So congratulations.
Yeah, thank you. Thank you. Well, the first thing I would say is that I'm going to retire the word retirement. So, but I did choose to step down from a full-time operating role with a large organization, and that process took a long time for me to come to that conclusion. Frankly, I considered it when I was at William Blair. But the reason I want to retire the word retirement is that's a really scary word. When you're
Right.
full of life, when you're full of impact, when you get energized from what you love to do, but you don't know any other track other than to keep doing it again and again and again. And that's almost insane when you're talking about careers now that we have longevity and increasing health spans and hopefully at some point along your journey financial security, that you actually get to stop the music for a little bit and say, what do I really want to experience? What do I really want to try? And so I've had 35 years of investing and running asset management firms and running money for other people. When I thought about what gave me the most energy and what did I want to try, what I really wanted to do was to carve out time for things that I always squeezed in
Mm,
during my full-time roles. I always squeezed it in, trying to find ideas, find people, find businesses that I could give voice to, that I could empower with strategic advice, that I could invest in on my own. I didn't choose to join boards because that was a little too much commitment to make while you're sitting in a full-time operating seat. But the fear of not having that structure, the fear of not knowing what the next options will be, I think hold a lot of people back, certainly held me back. And now I'm just very gratified, and I'll just pass along to everyone else. You shouldn't be thinking about retirement in any stretch, but I do think we all need to think about prototyping what will be 70 years of working careers and professions. And I think it's just insanity to
mm,
think that you should do the same thing for 70 years. You'll get stale. So, mine, that this is very much an extension of what I've done. It's a very strong transferable skill set, but being able to empower other people, businesses, and fuel ideas with the voice that I have, the platform that I have, the resources that I have, and strategic advice has been very, very gratifying. I've had more to do today, or I should say, I am equally busy and
mm.
energized and learning and growing in different kinds of ways. And when you are full on in the seat, um, and have so many stakeholders, there's just not the same, I'll frame it, there's not the same luxury to be intentional with your time. And there's not the same luxury to carve out time to think and be creative and connect. You've got moments. You carve
Yeah.
out those moments at 4 a.m. to 6 a.m. You go on your run, you swim it, you do whatever it is. All of us have done during our very busy, high octane careers to carve out time to think, but it's never enough. And so this has been the biggest luxury of all. I've discovered worlds and people and connected dots to networks. I mean, I've been very fortunate that I've never thought about my time in seat or my time over the last 35 years as building a network. That really wasn't a nomenclature that resonated with me, but building deep personal relationships and that personal mentoring and board of directors and all those other things that you talk about has always come very naturally to me. And so being able to tap into them when I have a company that I think has a phenomenal idea or needs advice about how to scale, but still have personalized outcomes for people, or they need to think through the best form of capital raise that they can, I'm one call away from virtually every answer. And that's pretty
Powerful.
astounding. And it's not unique to me. If you've been in business, especially in the C-suite, or you've been an investor for 20 years, even a decade, 30 years, not understanding the power that you have and the voice that you can empower others for scalable, positive impact on people's lives is just a pretty humbling thought.
Mm.
And it's a resource you're not allowed to waste. And so that's what MeydenVest is to me. It's a culmination of 3+ decades of work. And whether or not I continue to do all these things full time, or I choose in 5 years to go back into another operating role, or I buy a business, or, who knows what it is. But again, I'm looking at it not as retiring. I'm looking at, by any stretch, I'm looking at it as, you're prototyping a new way to have impact, in a way, frankly, that's more scalable and impactful than maybe focusing as much of your time on things that, frankly, other people can do equally as well as I can. What they can't do at this stage is leverage everything that you've harnessed. And that's a very exciting thing, to be thoughtful, intentional, and to spread and to scale in as many ways as you can. And I think doing it with, 20, 30, 40, 50 different people and businesses is a much better way than doing it with only one.
Well, I am inspired by the energy that you're bringing to it and the sense of spirit. You think about MeydenVest, it sounds like it's completely in alignment with who you are, what you've accomplished, the base and foundation of knowledge and people and community that you've built, and frankly, your life's purpose. And
Yeah.
even the name is an expression of also what your values are. Could you talk about how you came up with that and how this all aligns with your life's purpose?
Yeah, well, at my core, investing in women and other underrepresented groups, especially in my financial services and asset management industry, has been core to what I've done from the day I walked into the doors, and making sure that once they get there, that their power and their voice is felt for all the impact that it can be. So investing in women has been a big part of what I've done. Broader than that, but a big part. And I sit on a bay of water called Maidenbower Bay, and it's spelled the same way MeydenVest is. And it was a play on words, investing in women, maiden voyage, and it also, hedge funds and private equity firms all name themselves after the streets that they're on. So I thought, why not a bay of water? So it had a nice ring to it in many different ways. But I think the important thing is investing to me is about allocating capital in a way that's good for society and actually impacts people's lives for the better. And so if I can do that in a way, whether it's through, I didn't mention things like mentoring, I consider all those NGOs and the things I do in academia and the rest to be part of connecting those dots. But I do believe in public, private, and philanthropic service and making sure you can connect all those dots in ways that are very impactful to people. And you're investing in underrepresented groups along the way. And mentoring and giving back is all core to what I want MeydenVest to be.
Well, congratulations. It's not a trivial transition. I think about the number of executives who might look at your career, young women and men who are coming up the ranks and maybe considered or considering the seat of CEO and then moving on to a chairman and board member, and seeing you take practice that involved managing thousands to hundreds of thousands to millions to billions to trillions is a daunting affair for many people thinking about that. How have you transcended the imposter syndrome that I'm sure you've never felt, but the rest of us have, in terms of going from, from thousands to trillions under management?
Yeah. So is that a question about
Yes.
How do you make that mental transition? It's interesting. I get you asked it in a different way, but I'll align it to what I get asked a lot, which is, how did you overcome that you were the only, right? I was younger by a factor of a decade than anyone else that was managing money when I started out. And I was the only woman, and I've been the only woman for longer than I can recount. Fortunately, that has started to change dramatically. Not dramatically enough, but it started to change over the course of the last 10 years or so. You can definitely feel more of a stair-step change in that. Having said that, there's also the sleeve of imposter syndrome with just being a normal person trying to do good in the world and learn and grow. And all of a sudden you're in this post where other people project a lot of things onto you, and you do need to step up to the plate and be that person for other people. And that's always been very clear to me. It's never me, it's what's expected of the role. And when I think about it that way, what's expected of the role, it's me giving deference to the responsibility of the role. So whether that was a money manager for people's life savings, or it was running a firm and it was to the people or those on the other side, that's how I got over it. So I never, frankly, even noticed that I was the only woman. I never suffered from imposter syndrome. I'll tell you one funny story if we have time. There's only one. But I've never suffered from that because I've respected so much the opportunity and the responsibility that was given to me to be in that role, that I respected the role. And if I were reporting to that role, listening as a client to the person in that role, what would I expect and what would have me feel confident in the future with that person in the leadership seat? So that, to me, it's almost like it's not about you anymore. It almost has nothing to do with you anymore, right? You just have to step up to the plate and be all that role requires you to be. And I think the ability to do that has been very helpful to me along the way. And mentors have certainly helped. I haven't been perfect about it. Every once in a while, someone will tell me that it's my ego talking, and I know what they mean. I've made it too much about me and not enough about what it is I need to accomplish, even if that means swallowing hard on humility in many instances, doing things differently to appease other people to get to the same outcome. So lots of roles are like that, but especially the CEO role.
when I hear you say that, I'm reminded of a moment back when Jim Collins was working on Built to Last at Stanford, and he was here a mentor and a professor, very popular at the time. And I was part of the labor that went into doing Good to Great and Built to Last, and wrote a sequel called Success Built to Last, where we did a global study of people who've been successful for at least 2 decades, not the one-hit wonders, not the overnight
Yeah.
success stories, but the people who continue to have impact and a role in their industry, whatever the field, very much like the people we have in our LPR group. That's where the idea came from. And when we did that study, we discovered that most people had many moments where they didn't feel like a leader when they were stepping into the role, or maybe even coming in that day. We don't feel that sort of I'm the leader. It's not about me. It's about the cause having
Yeah.
charisma, and getting a sense that purpose. And I feel
Mhm.
that in MeydenVest as well, in terms of what is drawing you to that cause and allowing you to bring the full force of your personality to it.
Yeah, absolutely. And obviously all great books, all great learnings, but I think that's absolutely right. You put yourself aside, you bring the best of you. You've got to bring the best of you every single day. Everyone's watching. And so you just have to keep remembering that you've got to bring the best of you and what's required of the role. It's helped me too sometimes. I think often about the people I respect the most and what would I envision that they would do. You've got to make it your own, but would I ever expect XYZ to
Mm,
not rise to the occasion in this or behave this way, right? And it's different for everybody, and you're not trying to emulate anyone, but it's almost like it forcing yourself out of the imposter role. It's not you, it's the vision of who you hold in the highest esteem. And you've got to,
beautiful.
it still has to be incredibly authentic. It's got to be you. You've got to own it, but that helps a lot. That helps a lot.
I have to say, I'm very inspired by the work that you do, Michelle. Thank you for taking the generous time to share with others how you've made this trip and how you're having
Yeah.
impact today. And I can't wait to have further conversations about it. Thank you so much.
Yeah, no, absolutely. Another 30 to go. So I look forward to a few more rounds.
Thank you so
Thank you
much.
very much, Mark.